Hello, welcome to Financial Markets Weekly, an audio podcast by Succinct Information. This is a professional summary, free of noise, focused on facts, and straight to the point. We help you save time while covering the key events and market performance. These are the highlights from last week.
Markets rallied last week following a cooler-than-expected inflation reading in the US, marking the first decline in 4 months, and significantly lower than the previous month. Every developed equity index climbed. The positive news for risk assets, given the higher likelihood that monetary policy rates are at or near their peak, impacted the dollar with a sharp drop, while bond prices recovered, causing yields to fall across maturities. Let's dive into the data. US headline consumer prices were unchanged in October, and rose by 3.2% year-on-year, less than expected, and lower than the 3.7% recorded in September. The core CPI reading came in at 0.2% and 4% interannual, marginally below those of September. The overall sentiment was positive as it reduces the chances of the Fed hiking rates again, and many investors already called the peak of interest rates. Futures markets are pricing in a rate cut by next May. The other notable economic release was inflation in the UK, which decelerated rapidly in October to 4.6% year-on-year, compared with the 6.7% recorded in September, surprising analysts. Core inflation also fell to 5.7%. However, inflation in Britain remains the highest among G7 countries. There were no monetary policy meetings in developed markets last week. Back to global markets, the S&P 500, Nasdaq Composite, and Europe Stoxx 600 indexes all rose for the third consecutive week. The S&P 500 gained 2.2% to 4,514 points, and is now 17.6% higher for the year, compared with a 9.3% return for the Stoxx 600, measured in dollars. The best sectors in the US were those most impacted by the lower interest rate outlook, and include real estate, materials and financials. In Europe, the best markets were Germany with a solid 4.5% gain for the DAX index, and Spain, where the IBEX gained 4.1%. Staying within stock markets, the notable mega-cap mover was Tesla, which rallied more than 9% last week to $234, and accumulated a 90% gain year-to-date. The catalysts were the announcement of a car price increase in China, where demand has been strong, and positive words by China's president regarding Tesla's presence in China, during his visit to the US. Tesla's market value stands at $745 billion, and ranks top 9 among the largest US companies. Other single names with significant moves include retailer Target up 20%, Intel up 13%, Citigroup up 8%, Cisco down 9%, and Walmart down 6.5%, these last two after reporting results, and offering weak guidance. In Europe, Siemens was the outperforming large cap, with a 13% rally, after reporting solid figures. In other markets, the dollar plunged as the scenario for interest rates changed. The dollar index recorded its most challenging week in 4 months, experiencing a 1.8% decline, to 103.9 points. In rates markets, sovereign yields in developed countries experienced substantial declines across all tenors and regions. The benchmark 10-year Treasury yield witnessed a 19 basis points week-to-date drop, settling at 4.44%, the lowest level in 2 months. Notably, all leading yield curves, including the US, Germany and the UK, continue to exhibit an inverted pattern. In commodity markets, the noteworthy mover was cocoa, which reached $4,000 per ton in New York markets, the highest level since 1978, driven by a weak supply outlook in Western African production leaders, Ivory Coast and Ghana. Oil markets remain weak, crude fell around 1% last week, and accumulated a 20% decline since this year's peak in late September. Brent closed at $80.60, and WTI at $75.90. A few bullets to complete today's episode. Politics in Spain. Socialist Prime Minister Sanchez secured the votes needed from the Catalan separatist party to retain power. In Argentine politics, the presidential runoff election takes place today, with incumbent finance minister Massa and libertarian economist Milei as the contenders. Portugal's credit rating was upgraded 2 notches by Moody's to A3. 10-year bonds are yielding 3.25%. China released mixed economic data, with positive industrial output and retail sales readings, while urban investment surprised analysts with a weaker-than-expected print. Mainland stocks ended marginally lower. Online giant Alibaba was forced to suspend the planned spin-offs and IPOs of its grocery and cloud storage units. There were no major corporate deals or IPOs last week. That's all for this week. Please follow this channel and help us promote it. Visit succinct.info to learn more about our subscription. Have a good week.